Hello, hello. Welcome to the Five Talents Podcast. I'm your host, Abel Pacheco. I interview the top commercial real estate investors and industry experts so you can learn from their experiences. So if you're an investor, a high W-2 earner, or real estate or tech sales professional that wants to invest in real estate without having to manage properties or leave your day job, then this podcast is for you. Or if you're already investing in real estate, but you're doing it part-time and you want to become a full-time multifamily or full-time commercial real estate investor, this podcast is for you too. You're going to learn a ton. You will learn from real-life multifamily investors and other professionals in the industry. They're going to share their blueprints for success, and I'm super excited that you're here. So I hope you enjoy the show. Hello, hello. My name is Abel Pacheco. I'm your host of the Five Talents Podcast. Today, I bring you an amazing guest, Mr. Keith Arnell. Keith, thank you for joining, brother.
Yes, thanks for having me on, Abel. Appreciate it.
Yeah, man, I'm super excited. I get to spend a little bit, more time learning more about, who you are, what you do. We met, for those that are wondering, I met Keith through LinkedIn. We were doing a 10-day CRE challenge or something along those lines, and kind of helping each other go back and forth and pushing up some social. It's been a good LinkedIn kind of networking, kind of relationship. And now, man, I learned about what you did. I think maybe another session was like a virtual meetup, right?
Yeah, like a breakout room.
We did a breakout room and kind of got, even tied closer together. And there's a good example for those that are listening. How the heck do you network during COVID? And man, that's how me and Keith are on the show together today. So anyways, I learned a little bit about what he does, and I thought he'd be an amazing guest. So before we turn it over to you, Keith, let me make sure that I cover a little bit of your background so people know, what they're listening to the show for. So on this show, Keith is he's the founder of Pavillon Advisors. He did that since 2009. Pavillon Advisors, they're an outsourced controller or CFO consulting company. So, Keith is a trusted finance and accounting executive. He's got experience working directly with company executive teams. He's done startups. He's done real estate. He's done funds. He's done fund accounting, private equity experience. He's done a lot of amazing things in our world that a lot of times people don't think about. Like, well, what about the financials? Well, I promise you don't want me doing any of the books and any of our deals. And I rely on experts like Keith to kind of help make sure that everything goes well. That's why I wanted him on the show. He's a certified public accountant. And then I know you're, an avid runner, and then you do some horse training at the same time, man. That's awesome. So Keith, thank you very much. Let me turn it over to you. Tell us a little bit about yourself and who you are and what you do, man.
Yeah, no, I appreciate it, Abel. I appreciate you letting me, spend some time with you on your podcast and get to know your viewers a little bit as well. So I've been doing kind of a controller, CFO, outsourced accounting for small businesses, real estate, a lot of just different construction, general small companies for a while now. And so I'm more of a financial accountant. I go in, I kind of assess the financials, look at the balance sheet, the cash flow, the income statement or profit and loss, really try to just get an idea of where the company is. It's when I come in and assess it, try to help kind of get some idea of what their goals are for a company and what they're trying to achieve, and then carve out some different things to help them say, okay, this is where you're at today. This is where you want to go. Try to kind of put some budgets in there, monitor, and then kind of just really do the month-end close every month to really understand where they're at every month, and then kind of do some budget to actuals and different things like that. So on a high level, it's just really trying to help them from a management perspective to make decisions based on their financials or their cash flow. So I help with cash flow management systems and kind of, seeing where they're at and where they're going to be over the next, 12 to 13 weeks, and and really help drive the cash on that side as well. So really, really from very high level, more of a financial side. I am a CPA, so I do know a little bit about taxes, but I'm not a tax expert, and I don't do tax filing or preparations, but I work with a lot of different tax firms to help, from a tax strategy as well. But not the expert, but more on the financial side.
That's awesome. Thank you very much for the background. And so you, at a high level, we'll maybe start here, right? You deal more with the businesses accounting as opposed to an individual, my individual tax situation, correct?
That's correct. Yeah.
Okay.
So I do help kind of steer individuals, owners on a tax strategy,
Sure.
but I'm working directly with the tax firm. I'm kind of the liaison on that. So I kind of, if we need to bring in a tax attorney, or, if somebody's got a big land development deal, or real estate deal, and we're trying to see some tax credits, or different strategies like that, we'll bring in a tax attorney or a tax firm to help on that side, and I'm kind of there guiding the owner to kind of help that process. So I have my resources. I'm not going to play that person to say, yeah, I'm going to do everything, but really I'm helping the business owner. It's like, I'm the kind of the quarterback to really help the business owner or the team get where they're wanting to be.
Yeah, I love it, because when I started commercial real estate versus when I was in single family, when in single family, it was like me, my wife, we're the decision makers, and we were the CFO, and we're the, the money and the investor, we're everything, right? I go to commercial multifamily and I realize, wow, there's so many moving parts, so many things that could go wrong. And the numbers are way bigger, and there's more people involved, way easier, way better. It's just a better way is to have the right experts for the right job. We all want to bring it. We all want to have success. And the way we do that is have expertise in the right areas of our business and our company. And now I can rest easy knowing that I've got an expert, somebody like yourself helping me with my business. And then, like you said, hey, there's other experts for other things, and you can kind of determine which other expertise we need to bring in. And that's really, really great. And that is, so the difference between that financial accountant, which really you are, is you're helping the owner of that business determine where you are. I think I heard you say where you are, where you're going, and then, give me the financial picture, of where I am today so I can make the best decision. Yes?
Yeah, that's correct. We're trying to steer them from a financial standpoint of, should we be monitoring certain KPIs or metrics? Where's your cash? All those different things that when you really look at it, a tax firm, just strictly tax firm, they're there to file your taxes, which they do a great job, and they know the tax laws.
Someone has to do
all
it.
that.
Yeah.
But for the most part, most people are only talking to their tax firm once or twice a year. Either once when they have to do an extension, or twice when they actually got to get their taxes in to get it filed. And so I'm working with the company on a month-to-month basis to help understand where they're at every month. And if we're seeing trends where the revenue's going down or the expenses are increasing, we're going to be kind of monitoring and looking at that, saying what's going on here. Is your vacancy rate gone down, or is it increasing? All those different things that most people know when they're in this industry, but it's just a nice, easy way to report it and say, here's where we're at. This is what we're looking for. And I've been in different companies where I've gone into a company where they've already got a CFO. For instance, it was about 2 years ago. I went and talked to an owner. They had a CFO, and they were paying, premium dollars for the CFO. But the problem is the bookkeeper or the accountant or whatnot that was doing all the transactions, they were posting it into like a uncategorized account and it was 20 to 30% of those transactions. So here's a
You're flying
CFO,
blind, right?
right? Here's a CFO trying to help them, but the data is not accurate or
Yeah.
right. And so you can have the best CFO or controller or accountant or whatever, but if the data is not there and it's not accurate, then it doesn't matter. So I try to help on that standpoint too. We're looking at it every month. If we're seeing different things, or why is this coded here? Or where's this? We need to fix that so we can get the better data so that you can have better decisions. And that's kind of what I help with.
Yeah, that's so valuable, so important. When you think about from a multifamily, we have a lot of multifamily investors, passive and active. We have a lot of commercial real estate investors that are listeners or people that are trying to invest, right? So as we're going through this, we're buying not really buildings at a $10 million point. We are, but we're really buying income streams. We want to invest our money as owners, limited partner and general partners, the best income stream that we can possibly buy that generates the most cash flow, the most return, the best return possible. And part of that is looking at the numbers and the data as they come in every month to make sure this business or this income stream is generating as much revenue as possible so that we have the best returns. And when you have experts like Keith is saying, like a CFO that just doesn't understand where 30% of his expenses are coming from, it's so hard to make a good decision. Like in an apartment complex, I can see, well, these expenses are way too high in these categories or this area. We're spending way too much, in utilities. Maybe there's a leak, maybe there's a plumbing issue. I got to go fix this stuff. But if you don't know where it's coming from, then it's hard to make adjust any of those dials in the business or in your multifamily apartment complex to affect the return. So that's where Keith is so valuable here.
Yeah, and one other thing that I was thinking about too, I have a client now that I have one client that I started. They were kind of more on the construction side, so we started saying we need to track every job that you do for income and expenses, and so that we can see a gross profit, so that if you're bidding correctly on these jobs. Because if one job you're getting a 25% gross profit and the other job you're getting 5%, you're not bidding correctly, right? So now I'm tracking per job to try to understand, make sure he's bidding correctly, and he's looking at that going, oh, okay, I need to bid differently, right? Mm-hmm. So the apartment side or multifamily or commercial, it's the same thing. We need to kind of track how much maintenance is being spent on each different unit, or building, so that we can say, hey, why is this building that's just next door, 10% higher in expenses versus the one, across the street or whatever. Mm-hmm. And so that helps businesses to kind of look at it going, oh, hey, we've got a trend that's, 10% expenses or repairs or whatever. And then we've got this one 25 or 30. Then you can have a decision to be like, we got to what's going on? Did we change the maintenance guy? Is that maintenance guy more expensive than the previous one? All those different things. And that's the value of trying to help and to be more efficient on, instead of like a year later going,
look what happened.
I've had this happen. People only come to me when they don't have any cash. And then you're like, well, how am I going to get paid if you don't have any cash and I'm supposed to help you? But so they're great. And then in 2 years later, they don't have any cash, or like in 08 or 9, and then you're like, well, if you would have come to me 6 months ago, I could have helped kind of seen where you are, right? So even in good times, it's still important to kind of monitor those, because once the trend goes down and there's a little bit of lean, you need to really be able to dive in and understand where you're at so that you can kind of push through that side as well.
Yeah, those are some amazing insights, and exactly right. And if you're an individual investor and you're thinking, this doesn't apply to me, we're talking about multifamily businesses. It applies to the investments you're getting into, number one, but it also, there's just a parallel straight to your own P&L, your own personal financial statement, your expenses, your losses. Man, look, if you're not doing a PFS, once a month or quarter or something, there's some regular check-ins on your own personal financial statement. What's my asset? What's my liabilities? What's my net worth? And how much income is coming in? And where are those red trends? Are you spending more, frivolously this quarter than the last? But anyways, we digress. So this is really good insight. Let's kind of keep talking about this because this is really good. What are some of the best strategies that you see, kind of the best, most profitable businesses that you manage versus maybe some of the other ones that are poor? And I think you touched on a couple, but what are some of the strategies that you see, your highest performing teams, and what are they doing so we can try to model some of those things?
Yeah, I think the most important is they understand where the business is. They're really monitoring those metrics. And when we talk about dashboards and metrics and different things, really, if you look at some articles, and I've looked at some articles, they say 4 or 5 tops is what you want to be looking for. Because if you do anything above that, 7, 8, 9, it's just white noise, and it's not standing out and really helping. So I would say anywhere from 4 to 5 metrics that you look at every month and you monitor those. And as you dial those in, then maybe after a while you look at something else because you've got those dialed in. But most people are really understanding where they're at from a cash flow perspective and a financial standpoint. So they're looking, and the P&L is important, but the balance sheet is almost as important because at the end of the year, if you have $50,000 or $100,000 in security deposits, and you're only supposed to have half of that,
yeah,
well, there's a problem.
Yeah.
So, or vice versa, you paid for something and you're not writing it off, so now you're not getting it on the tax return and different things like that. So it's really, I think the biggest is timely, accurate, and relative financials.
Yeah.
You get it timely, right? You're getting it within the first 15 months or 15 days of the month, because if you get it 2 months down the road, it's too late. It doesn't matter. You're already 2 months, you need to be looking at something else. So timely, accurate, you need to make sure it's accurate, and then relevant. You got to be able to be monitoring the correct data. And I think those people that are looking at that, they're going to be, if they're seeing some trends that aren't advantageous, then they're going to be able to kind of start looking at that before it's a panic. And then once it's a panic, then you're trying to get loans and line of credits, and it's really hard.
Yeah. Oh, that's so good. All these I'm trying to take as many notes as quickly as you're saying. If you don't want to end up in the tar, then you need to have timely, accurate, and relative financials. TAR. I'm gonna don't end up in the tar, man. That's so
there
funny.
You go. That's perfect.
So Keith, the cash flow, P&L, balance sheet, all kind of go together. You're trying to look at them and trying to make the best decision. Your KPIs are very important. If I'm flying a plane and I, hit the massive fog and I can't see anything, well, my dials are going to tell me what altitude I'm at, how fast I'm going, how much fuel I have. And I've got to be able to make the best possible decisions based off of my dashboard. And that's what's going to help me keep steering this plane if I hit the massive fog, right? And so that's absolutely, critical to have those 4 or 5 top KPIs. What are my dashboards for us in apartment complexes or, just commercial? Yes, steer in multifamily, steer in apartment complexes. What advice can you give me? What are those top 4 or 5 KPIs? Just make it simple for me, for a simpleton like myself.
Yeah, right off the bat, you're looking at your vacancy rates, right?
Yeah.
You're most of them, you're going to want to be a vacancy rate of 5%, 10% max. But you're really looking at that. I would also say your repairs, you kind of your cost, your repairs and maintenance is a huge line item in in your apartment complexes, your rent prices. Now, some people don't talk about this, but it's like, I would say every year, once a year, you should be going around and getting a market value on what's out there.
Mm-hmm.
I live here in, Utah and Salt Lake. It's crazy. And there's other places. There's Dallas and Texas and California, some of the other places. Phoenix is a big one. Out here in West, I don't know enough about the East Coast, but those places are just, a ton of people are moving from California, Nevada, different things. And so you're missing out on money if you're not looking at those prices, and maybe even 6 months, because it's just so crazy right now. But I would look at that and just determine, hey, should I raise the rents? Because you'll miss out if you're not in the right market, right?
Mm-hmm.
You want to make sure you're getting tenants, but at the same time, you're not losing money. So some of those, the tenant turnover is a big one. If the tenant turnover is high and consistent, then you're going to want to try to figure that out, because it's like any acquisition. You want to keep that person in as long as you can. It's just too much money to try to, over, and you go in, and every turnover you have to go and make sure it's the cleaning fees, the repairs, everything. And so it's expensive. So, but I would think that, and in your commercial side, your cost per square footage is a big one, and revenue per square footage. So some of those are the more common ones. Obviously your cap rate, some of those, but there's more out there. But those are just the basics.
Yeah.
Really to be driving.
Yep. Those are all really good KPIs. And then a visual. You made me think about this somebody shared this story with me a while back, and it kind of all came flooding back right now, when they were talking about the dashboard or your KPIs, the top ones to look at. And the guy was describing, I think it was a teacher, or I don't know. Anyways, they were describing a NASCAR, or driving in a literal NASCAR, and you're going, I don't know, 100, 150, whatever miles an hour, right? Well, it's kind of hard to take my eyes off the road and look at this dashboard. And I'm like, man, do I have enough fuel? Is my engine overheated? Whatever. So what he described was, in a visual dashboard, he said, one of the top drivers said, oh, it's easy for me to maintain my dashboard. And he goes, well, how? And he goes, well, all those dials, they were all pointing in different directions. What I did was I turned them in a way that I knew, as long as they were all facing up, literally facing up at the right direction, then there was no issue. And I didn't care if it was 3/4 full, 75%, whatever my engine temp was supposed to be here. I literally turned the dials in a way so every single hand that was sticking up, as long as they were pointing straight up, I knew I was okay. So when you're looking at your own KPIs in your own business, it's probably great to talk to Keith and say, hey, what are the sweet spots in every one of these KPIs, and just color code these things for me, man. Make it easy, green or red.
That's a good analogy. That was actually, that's pretty interesting. I mean, I think it's, kind of the same as autopilot. Hey, as long as there's no, yellow flashing, we're good. Let's
just keep going. Yeah. So when you're talking to an expert like Keith, just say, hey man, what are my green areas? What's my green, yellow, red? And dumb it up for somebody, a simpleton like myself, my friend. But these are all really good, Keith. Thank you very much, man. So I did have a couple other questions, because you also manage funds. For those that don't know what a fund is, well, I'm an individual investor. I work with a team of individuals, general partners. We go by, at this point in my career, I buy one deal at a time. That's enough for me to manage. I want to make sure I crush it on this one deal at a time. Other investors have found that there's goodness in buying multiple deals at the same time. You're buying a portfolio, you kind of raise a fund. I can go draw as much, capital as my fund requires. I can raise from investors. They're trusting you to go spend their money wisely, and I might invest in multiple different deals all at the same time. And that's the fund, right? So as a financial accountant, if I hired you to help me run my fund, what are the differences between buying one building and managing this fund for me? How does that work?
Yeah. So usually on a one, when you buy one building, and you may have it syndicated with a couple investors, right? You're just dealing with that one building. Income comes there. You have it, file your tax return, et cetera. It's, you're just dealing with one building. But when you start into an investment fund or a real estate investment fund, now you're pooling multiple investors. Could be, up to, what, two or three, up to hundreds or whatever that capacity looks like, or that structure. But now you're usually buying multiple buildings. You're buying 2, 3, 4, 5, and your portfolio will just continue to rise. And so now you have to kind of consolidate all these buildings and all these KPIs and all these different things into one fund and account for all those different, all the different revenue streams and the expenses and everything. And so it gets maybe a little more complicated in a fund, and then how to allocate all the profit and loss to the investors based on each, agreement, per, usually an investment fund has a manager. So those managers are going to get a carry and some of these other things. But yeah, you're dealing with all those investors, and you want to make sure that you're getting it all right, because if you don't, then you're not probably going to get any money ever again, right? Like,
it won't work out so well for you in the future. Yeah.
So, yeah, that's kind of the difference. You're just dealing with one building for maybe 1 or 2 or 3 investors, or whatever, versus, hey, now we've got this whole fund, and one building, if it's really bad, affects all the other, as far as income and expenses and losses. So you're trying to make sure that it evens out, so that you get a decent return.
Yeah. You're essentially also helping me consolidate all of the financials from maybe let's say I run the fund, I raise the capital, and I'm invested in 7 different syndications, and I want returns from each of them. But now I got to manage all of that. Well, this one gave me X percent, this one gave me this percent, but my total fund invested across, what is my return as a fund manager? And then how do I know how much to pay individuals, 70, 30, 80, 20, whatever, all those different things. You make it simple for somebody like me to go do that.
Well, that's the hope, right? That's
at least on the financials. You keep me out of the tar, remember?
Yeah, that's right. That's right.
That's awesome. Hello. You're listening to the 5 Talents Podcast. I'm your host, Abel Pacheco. If you're enjoying this podcast, then I know you're serious about achieving financial freedom. Are you ready to create your own path through multifamily investing for yourself and your family? Then I know you're going to appreciate our Investor's Guide to Multifamily Investing. It's titled Tackling Commercial Real Estate the Easy Way. We use this guide to invest ourselves in $93 million worth of real estate. So we're going to show you the basic mechanics of multifamily syndications and how to evaluate your next passive investment opportunity. So the best part, if you subscribe to our podcast now, leave us a review and a rating. I'm going to give you a free copy of our ebook. So please take a moment to do that now. Once you've done that, go to 5tcre.com/ebook, 5tcre.com/ebook. Make sure to let us know you left a review, and we're going to send you a free copy. So thank you so much for subscribing to the 5 Talents Podcast. We really appreciate it. So what are some of the things that you see people get in funds, like when they reach out to you? Do you get a lot of people that have never done a fund before? Do you have people that are, they're experts, this is fund number 7 and they've raised $100 million? Is it a little bit in between or mix, or what? And then maybe talk to us about your common everyday customers today, people you serve.
Yeah. So I have gotten a lot of, so I have a couple different securities attorneys that I know that they'll refer me to different clients that are starting a fund. And usually they've been, they understand what a fund is, but they're going to start it. Maybe this is their first time. So I get a lot of first timers or relatively new managers that are going to start a fund. And then I get calls, like I just got a call for a kind of a private equity group that they were going to start another fund that they've been doing this for a long time, but they're going to do it in the oil and gas instead of real estate. So
yeah,
and so I get different calls, but a lot are coming from startups or first timers because I get those referrals.
yeah,
And so the biggest thing to really look at is the cost to start a fund is pretty aggressive, pretty high. You've got the attorney fees, and you've got you've got your PPM that you've got to start, and that's all the attorneys, and then just all the cost of getting it ready and licensed and all those different things. And so you got to be really like I had a couple guys actually call me, and I actually talked one of them out of it. And I said, I think you'd be great, but there's a lot of things that you need to be aware of, and it just wasn't a good timing for him. And I kind of talked him out of it.
yeah.
Not that I didn't think he could do it, but it's just because there's a lot of just different regulation and things that you just don't really realize. And so if you're ready to do it, that's great. Because they can do, you can make some good money and do well, but there's also a little bit of the regulation part of it too that makes it sometimes a little bit of a headache.
Well, now you got me curious. What were the biggest one that was like an aha moment for him? He was like, I didn't realize that. What was that one or two things that?
Well, because I think a lot of people are like, hey, let's start a fund, and that sounds great, and I'm going to make some money, right? But
Yeah.
what I usually tell people, I say, if you're only typically, and this isn't always the case, but typically, if you're only raising $1 million or $2 million, it's not really worth it. You've got to be a little bit higher. You've got to be more like 5 to 10 and higher to be like, yeah, this is really worth it. Because the first year is usually you're not making a lot, and then after that it's great, and it snowballs and different things. And you're getting new investors. But if you're saying, hey, I'm just going to raise $1 million or $2 million, it might not be the best. It's just a lot of work.
Just go do a single deal. And 1 or 2 million, that's kind of, just do a deal.
Yeah. Because you're dealing with anywhere from 15 to, and I've seen up to $100,000 for a PPM.
Yeah.
So they're really expensive. And 15 is really, I mean, I got an attorney that will probably do it for 25 and sometimes maybe a little cheaper, but it is expensive. The costs up front are just really expensive. And so you got to make that up.
Yeah. So if you're listening now, looking at your potential options, if you're raising $1 million, $2 million, to me, that sounds like going to do one deal at a time. We're doing a little under 100 units today. The capital raise is a little at, about $2 million, and we're going to close on this deal, soon. And so we're thinking, okay, well, that's not a fun territory. Let's just do one. Now, if I had, book of investors, like what Keith is talking about, the private placement memorandum is the legal documents that you're going to sign to go do that deal. If you're, you have $8-10 million and that you're going to be able to do that, that might be very worth 30, 40, 50, like you said, up to 100K investment to go do that. And now you can go invest in a bunch of deals, right? So that makes a lot of sense, man. Thank you very much, Keith.
Yeah.
What else do you think, about K1s? Not what do you think about K1s, but can you share some insight on the K1 process that you kind of help people with today? Whether I'm a fund or I'm investing in commercial real estate, how do you help them with that? The only thing I tell investors is like, you're gonna invest in the deal. and you're going to be a K1 owner. And the next question is, okay, well, what does that mean? And I go, well, I'm going to have somebody send you a K1 and you'll send it to your tax person and they'll plug it in and you'll get some losses, God willing, on the deal. But tell us, from your, expertise, what is a K1 and what does that mean? Maybe active versus passive investor, just, help illuminate a little bit of this stuff.
Yeah, for sure. That's when you're a passive investor, to get a K1 and really not understand the deal can be kind of a little bit like, what does this mean? So really, first of all, a passive investor, as most of you probably already know, is one that just puts money in the deal. They're not active in the business. They're not in the operations. They're just putting money in the deal and getting a return. That's a passive investor. Obviously, an active investor or an operator is one that actually is in the day-to-day business of the entity, and they have some kind of role, on a day-to-day or month-to-month basis. And the passive investor is obviously, sometimes it just depends on. Usually, a passive investor is going to get better a tax rate because ordinary income is a higher rate than passive. But sometimes, like I have one fund that their fund is not a REIT, and so there is some better tax advantages to investors that are in a REIT. But if it's not a REIT, and that entity is this is what we do. This is our business. We're not like doing it on the side. That fund is an active fund, so the investors are getting they are getting ordinary income. And so sometimes, even though you're a passive investor, you're still getting ordinary income. And so sometimes you're thinking, hey, I'm going to get capital gains, and that's not the case. And so the K1 really obviously the operating agreement spells it out, but the K1 will dictate what the numbers and what line items are on the K1. Passive, interest income is a little bit less than ordinary. Then you have some other deductions, and when you're in land development and different things, there could be some deductions that actually are really passive deductions, meaning they only can offset with passive income. And so you have to kind of look at that, because you may not get those deductions that year. You might get them the next year when they actually sell land as an investment income. So I guess high level is kind of try to understand what the business is beforehand, because you might think, hey, I'm getting a great deal, this is passive income, and in reality it might be ordinary, and you're paying a little bit higher taxes. So
you definitely got to ask a lot of questions before you're investing to make sure that, like what Keith's saying. So I think all of our deals are, like, we put individuals in and they want a tax return or paper losses from cost segregation studies, accelerated depreciation, and we kind of preach that from the side. So we're like, yep. And, we are trying to take advantage of this. You absolutely have to ask your syndicate, your operative, somebody you're investing with, to make sure, hey, is this going to be the way it works out for me on my taxes or not? That's a good point.
Yeah. So those are the different types of different things on the K1. I mean, there's a lot of different things that happen with real estate, like you said, depreciation and all those different things. And sometimes depreciation works. Most of the time it does work for the individual, but you really have to look at your own individual personal tax return to see how that's going to flow through correctly on your end as well.
And also, this would be the difference between we should not reach out to Keith, or don't reach out to you for my individual tax questions, correct?
Yeah, I mean, I can help if you have a tax or a more of a personal CPA or whatever does your taxes, but I don't do tax filings, and so
those are the individuals that you need to reach out to. What Keith is talking about is, or I think you are, correct me if I'm wrong, is for your situation, you may not be a real estate professional, like maybe an active general partners or real estate professional. We can write off different taxes here and there. We can take advantage of that depreciation more than somebody else. or, you know, if you have a lot of, you know, active income versus your passive income and how it relates. So make sure you're talking to your CPA, you're talking to your tax strategy, tax strategist, somebody to help you on your side to determine, hey, if I get a K1 like this, and that's when we would leverage Keith. Hey, what does the K1 you think look like in this business? And then we'll share that K1 with the CPA and then say, oh yeah, based on your situation, here's what it's going to mean for you and your individual W-2 or withholdings or write-offs and that type of thing, right?
Yep.
Did I get that right?
Yep, that's correct. I'm going to help the business from their tax scenario and work with their tax firm, but on the individual level, you know, I could help, but I wouldn't be the main tax guy. You'd use your own tax person or CPA to kind of help with your tax filings, and I'm more or less the liaison with the business side to help with their taxes on their on that side.
Very good. So if you are a general partner or thinking about a fund and you want some help on the internals, your books, making sure you can see the dashboard, green, yellow, red, Keith is absolutely a fantastic resource, as you can tell, in this space and kind of an expert in that area. While we're on this topic, if our listeners resonated, they found that they want to, you know, hire you, work with you, get in your world, where do they reach out? What's the best way for them to contact you, Keith?
Yeah, I would say, so my email or my phone number would be the best way to contact me. My email is Keith, Keith at pavillonadvisors.com. And maybe Abel, you can just post my contact info on the podcast or whatnot. And if anybody's out there, you know, kind of thinking about different things, I do more than real estate too. I have a lot of different companies that I do business for. And so if you have other entities or companies that you're needing help with, you know, kind of a month-to-month basis, then I can definitely help with, you know, those companies as well. But yeah, Abel, feel free to, you know, put my contact out there, you know,
Will do.
Email or text me or whatever. And I usually respond pretty quickly.
Will do. I'll make sure to put that in there. Also, what for the listeners, the people that, you know, really just have a hard time with numbers, financial literacy is so valuable. I've realized that, I don't know, in the last few years, right? I just have started digging into the P&L, the income, my net operating income, you know, all the income minus expenses. Let's figure out what it is, the balance sheet. The more that I learn, you know, and really have a better understanding of the numbers, the more that I feel like I'm in a position to earn more also, or buy a better income stream. And it's been so valuable for me. But I can tell you, I don't know, for years, I just never looked at a P&L. I was a sales guy, was a tech guy, former tech, you know, employee. And actually I had a pretty big team. I had 60, you know, sales guys under me. So I managed, you know, 5 different sales managers. We went from like $5 million in revenue in a year to $57 million in revenue. We grew our team. We had a lot of headcount, a lot of growth, but I didn't look at the P&L. It was actually my vice president over me that would say, oh, well, here's how much headcount, here's how much we can afford to get. And if I would have known earlier in that career, I bet you I would have even grown faster, because I could have said, well, I could have looked at the dials and said, hey, every time we hired another rep and drove X amount of quota, you know, I got an extra 20% juice out of this. So let's hire more and I can justify the expenses. And I just didn't see it, you know, back then. Now I very much see it. And this is kind of like is it a good deal? Let me see the financials, right? Trailing 12 and rent rolls. And let's look at the comps and see what I can push. So what insight or advice or just nuggets of wisdom, whatever it may be, Keith, can you give somebody, you know, like me 4 or 5 years ago? You know, how do I learn more about the numbers, man? How do I get to your, maybe not to your level of your expertise, but just to be able to understand what you're telling me or showing me from your expertise? How do I do that?
Yeah, I think it's just like anything, right? Anything that you're trying to learn, and there's a learning curve. Whether that's if you're, starting out in the real estate world and you're trying to look at different homes and what's the best price, and it's a learning curve, right? It's experience and different things. So, with my clients, I try to send them a kind of a financial report every month, and so my advice would be, hey, if you have somebody um, that you can look, or that they can look with you on your financials, then that would be the first start to kind of look through it, start asking questions. And then you may not have a lot of questions at first, but over time, as you're looking at different trends and looking at somebody that can kind of help you, you'll start to learn more and more. And so, and that's what I try to do from a financial accountant and financial perspective is I really want to let management know where they're at and understand the financials, and then and even if it's only a half an hour phone call, they should be starting to pick up more and more of their own business and what the numbers look like. So my advice is just to start wherever you can. If there's somebody that can kind of help guide you, or there's a lot of online different information on all that, but just to kind of start, and you don't have to be an expert, but there's a learning curve, and as you do it consistent, you'll pick up little things every month.
Yeah, so awesome. What you're saying exactly is really, now that I think about it, when I started, it was my passive investment. I invested passively. I took my money from my 401k. I directed into a self-directed IRA. I put that 50K into my first, 128 unit apartment complex. And I was riding along without any duties or responsibilities, but I'd get the profit and loss. I'd get the income statement. I'd get the financials. And I started looking at those numbers, and that's what started to soak in. And I go, oh, okay, this is what they mean. So yeah, that's great. Thanks,
Yeah,
Keith.
yeah, for sure.
Is there anything we didn't talk about today or anything I didn't ask you about that you really wanted to highlight, or, just any last parting words? Man, time is yours.
No, I really appreciate you letting me come on and just discuss some of this stuff. I mean, this is what I do. This is what I love. Other than training horses, this is what I'm good at, right? So,
Yeah.
but no, I think just trying to understand from a financial view of any business is going to give you insights into your business, and that's what I try to kind of help people is let's let's dig into your financials, let's get an insight into your business, and let's just try to understand where you're at. And then once we understand it, then we can kind of make some goals or some different things on how to approach it and what the best strategy is to, either increase revenue, decrease expenses, or what have you. Because the name of the game is, you're trying to make money, right? You're not trying to lose money. So the best way to kind of help being efficient and efficiency can create less expenses, right? So and what I guess what I preach is I want to help you with your financials and your accounting so that you can just be in your business, working on your business, and you don't have to stress over all the finances. If that gives you 10 or 20 hours a month of your time to go do what you are an expert in, that allows me to be an expert in my space so that you can hopefully make more money. That I'm bringing a value add and not just kind of a cost, so that it's a win-win for both parties.
Yeah, that's awesome. Thank you so much, Keith. I really appreciate your time, and I'm very glad we got to do some virtual networking and now end up in our podcast today. And I hope to stay pretty close to you in the future, and let me know if I can ever be of value to you, my friend.
Yeah, you the same. I appreciate you, and I'd love to kind of just get to know you better and your properties and what you're doing, because I think there's a lot of value there as well. So appreciate it.
Yes, sir. My name is Abel Pacheco. I'm your host for the Five Talents podcast. And if you heard something today that provided you a little bit of value, was good educational, insight for yourself, please give us a review. We would love a written review, a 5-star review if you thought it was awesome, and connect with Keith. His contact information will be in the show notes. And we look forward to seeing you next show. Thank you very much. Talk to you soon. Thanks, Keith.
Thank you.
All right, my friend. Thought that was good.
Yeah, no, that was
What
was
did you
good.
think? What did you think?
I think it's great. I mean, you just I just never know what, how it's going to work out, right? But I mean,
yeah, you just go out, you're like, oh, what questions? I don't know. Let's go.
I think it was really good, and it brought attention to what I actually do, and there was no question that was a little awkward. That was awkward, or well, I don't know if I know that, right? So,
Yeah.
And I think it just kind of gives a broad perspective of different accountants and different different things that they do and value and different things. So, no, I think it was great, and you're a great host, and you do really well at the questions and and all that kind of stuff, which I wouldn't be very good. I'd be like, okay, let's see what else?
Oh no, man, that's funny. No, thank you very much for the feedback, and I'm curious and just generally excited to learn too. I you can't see this because of my screen, I think. Oh no, you can't. But I mean, I took a bunch of notes, man. I'm like, I'm writing it down, and nuggets for me, and some good reminders, but more so a lot of good nuggets for me too. So yeah, thank you, man, very much.
No, that's awesome. Yeah, I'd love to know a little bit more about you. I'm always investing in different things, and so I try to keep my eyes open. And so if there's time we can talk, at a later date or whatever, I'd love just to kind of see what you're doing, and I'm always trying to diversify in different things, and so.
Oh yeah, yourself too, right? Yeah, I mean, typically it's one. I'll have your email contact information. I'll put you on our newsletter, so you'll get a monthly newsletter. I'm doing my big surge right now is like really exposure. So yes, I'm still doing deals. We're closing a 120 unit deal next week in Dallas, and it's apartment complex. Multifamily is the majority of what I do. And then we're closing we just finished the capital raise for a 3 portfolio property. It's like a warehouse or manufacturing. We do like net sale leaseback. I got partnered with a team. They're pros. They've done like 22 deals. And basically what they do is the brokers send them, they've gotten really good at like being this brand in the market. Brokers send them the deals that the companies want to sell their buildings and cash out, but they need to lease the property they're in. They want to stay put. They just don't want to own the building anymore. So it's called a net sale, and then lease it back to the business for another 20 years. And so they've done that for years, and I'm the new guy that's just trying to make my way in with them. But we're closing on 3 portfolio property at the end of October. That's about a $15 million deal. The Summer Wind 120 units is like a $10 million deal. And then we're closing a $5.5 million deal at the end of November, 88 units in McAllen, Texas. So it's I've invested in about 800 doors, 865, like 400 as a passive investor, and then 400 as an active. And then these 3 new deals are like, I hadn't done a deal since like October of last year. So like that's almost a full year, and then boom, boom, 3 back to back to back. So I was like, oh, thank you, Lord. It has a little bit of something going. But so with this past, like this first year, the first part of the year, since October to Jan, we had 2 deals under contract, monster deals, 400 units in Corpus Christi, Texas, and that deal fell apart because of COVID. And I was with another team that 268 in San Antonio. Both of those deals, COVID went away in March. So from that point till today, I was like, well, shoot, I can use the time to draw exposure. So podcasts, I wrote an ebook. I've been doing my social. So I'm really trying to like say, hey, I'm here. Anybody looking at interested in investing, I'm here. And so that's where most of my time has been. And then, God willing, next year again was like, okay, look at those other deals, because these 3 deals is basically I'm a small percentage partner in their deals. They found the deal flow. Oh, great. You need a partner. Yeah, let's partner. But next year I'm going to hit it hard again to find, our own deals again. And so that's kind of what we do. We raise capital one deal at a time, syndication. We use 506B deals. So I haven't advertised or anything like that. And then, that's basically it. I'll send you a few. I'll send you these most 3 recent deals so you can check them out.
No, that's cool. Yeah, and if you never ever need help with the accounting on that side, let me know. I'd be happy to kind of see where you're at and if there's any value there.
Yeah. Well, typically the like I said, the teams that I'm working with, I'm the small percentage guys on their deals.
Oh, they're the ones that do.
Yeah, they're the influencers, decision makers, whatever. I'm just kind of I'm playing my active part along the way. But they've got it wired for the most part. And then but yeah, eventually I'm going to need some help once I close another deal down, with everything. Right. So,
yeah. Send me that, because I look at investments and have money, usually set aside to try to do different things. So
man, that's cool.
I'd be happy to look at that and just see if that's something.
Yeah. Something works out in the future. I'd love to have you on. And then hopefully you get some business too from the podcast.
Yeah, I'm hoping. I think this is really great, and I'm glad you reached out, because this is great kind of exposure for me too. So I really appreciate it.
Yes, sir. I've been on a couple of podcasts where they're like, "Hey, I saw you talk on this show, and wanted to reach out." I'm like, "Oh, thank you." And then even people that I already knew, but they said, "Hey, I saw your show. That was I didn't know that about you." And I was like, "Oh, great. That's good too." So both ways, to my existing contacts and then not. And then also, so I've got enough shows. I'm probably recorded about 40-ish, and I've released about 15. So I'm releasing one a day until they're all gone. And then I'll probably go on a more normal pace, not one a day. But so your show will probably be coming out at the end of November, the beginning of December-ish.
Okay.
So I'm just going to push it out. And then once it's live, I'll send you some an piece of artwork. I don't know if you looked on my profile lately, I've got the last ones that I've done, little artwork, show title, show notes, links. And then I found that we get the most exposure when I send it out and you send it out, because the algorithm shows some people mine, and then on yours, it shows a different people. And when we're all connected, so we'll do that whole thing. Yeah. So once it actually comes out, we'll get the most exposure for both of us.
Oh yeah, that would be awesome. That'd be great.
Right on, brother. Well, thanks, man. Thanks for your time and thanks for your help. And then, oh, dude, you know what? You run into a lot of people. If you know anybody that needs assistance with commercial loan origination, I do that also. So if anybody that I'll try to send people referrals to your way if anybody needs what you're doing. And then I work for Peak Multifamily, so commercial loan originator.
Which one? Peak?
Peak. Do you know Anton Matley?
Peak Living?
No, Peak Financing.
Oh, Peak Financing. Okay.
Yeah. Do you know?
There's a private equity group here in Salt Lake called Peak Capital.
Different. Yeah.
Okay.
I work under Anton Matley. He's a Swiss kind of financial dude. He's been, family office director, big dog money guy for years. And I'm really just trying to jump under him to learn as much as I can. And I'll have a lot of conversations with people that want to partner with me one way or the other. And if it doesn't work, I sometimes I help them with the loan origination. So it's,
you know what? I forgot to say this, well, because it's probably not, because I don't really know exactly too much, but so I have somebody that reached out to me that, and they're going to just do it here in Salt Lake, but they have property, like wetland property, and he's an environmental engineer. He's gonna basically rezone it into commercial.
Oh, that's awesome.
And so if there's developers that are wanting to buy that land and develop, probably like senior housing living, that would be they could probably come in. I could work it where they could come in and probably get a discount, because we're gonna buy these pieces, or he's gonna buy this piece of properties for pretty cheap because they're wetland, and he's gonna take it out, and then market value will be really good, but he could probably come in and discount it for people that are looking for something like that. Mm-hmm. So just to keep that in mind, I'll reach out to you as they start going, but you might have people that might be interested in that.
Yeah, one way or the other. Yeah. I'm more than happy to try to help generate some business for each other throughout the year, man. Let's just stay on it, right?
Yeah, for sure.
Okay. Sounds good.
And I always get hard money lending. So if you're in the kind of hard money, and you're wanting to lend some of that stuff, I like this guy would be like, hey, I would need a hard money because he's gonna maybe need to buy it and then he won't sell it for another month. I mean, it's like gonna be quick, but I don't know if that's even in your wheelhouse. But
as long as it's commercial and over $2 to $3 million, then we can help them source it. And we're basically like, I'm the broker of, so we have hey, these are regional banks. These are big, recourse, non-recourse. These are probably some hard money guys, and whatever that is, I'll help them source it. And, if I can source it for them, then it helps me.
These I think will be around 2 million. So I'll just reach out to you as I start knowing more, and then you'll make some money based off the broker fee or whatever, and hopefully we'll get some other side.
Sounds good, brother. Well, hey, thank you very much for your time. I appreciate it, Keith. If you need anything, just let me know. Yep.
Okay, thank you.
Yeah, brother. Bye-bye.
Bye.
Thank you for listening to this episode of the 5 Talents Podcast with your host, myself, Abel Pacheco. Each week, we're going to bring you interviews from industry experts and commercial real estate investors who followed their dreams and achieved massive success. Before you leave, let me ask you a few questions. Did you enjoy this episode? Did you learn something valuable? Was your mind stretched to what's possible and what you can achieve? Do you want other experts just like the one you heard today? If you answered yes to any or all of those questions, then please take a moment to subscribe to the 5 Talents Podcast, give us a 5-star rating, and most importantly, leave us a written review. Tell us what you liked, tell us your favorite guest, give us any feedback. I'm excited to learn and improve so you can get a more valuable show. So thank you again for subscribing to the 5 Talents Podcast.